What's up, everyone? Back again. Today, we're going to look at a stock. Um, before I get into the stock, please remember, hey, I'm not a financial advisor. I'm not your financial advisor, and I am going to look at the stock as from an investor standpoint. And the stock is going to be called Lowe's Companies Inc. Um, Ticker symbol LOW. Now, if you don't know what the company Lowe's is, they are a home improvement um, store. So I'm gonna look it up. So Lowe's, they sell all type of home improvement. They have a lot pretty good savings right now, and they sell appliances and home repair stuff, and they also offer you ways to fix it. I They're a pretty good store. They rival Home Depot, but should I invest into them this year? With the stock market dropping right now, should I invest in the company? Is it a good, stable company? Now, they do give a dividend yield of 1.89% right here, as you can see. And the analyst does say it's a buy. But is it worth buying for an investor standpoint? Well, I need to look at the numbers. Um, the chart on this for looks pretty good still. They're steadily increasing. In 1 month, they went up 5%, and year to date, they went up 9%. 1 year, they went up 4%. 3 years, they went up 19%, and 5 years, they went up 129%. So those numbers look really good for to purchase. And with the market going down, yeah, um it looks like it's gonna be a pretty good stock to purchase. But with the another company going closing down called LL Flooring, you really want to look at, hey, how much money is this company really earning? So Lowe's earning has grown 12%. Revenue has grown by 3.61%. Technically 8-year compound, so that's good. They have growth on their amount. The financial situation is position is their assets increase it by pretty good amount. They're at 222.7 billion in short-term asset position and 41.3 billion in long-term. I think that's a pretty good increase from the prior year. And let's see who is in it. So, as you can see, BlackRock is invested in them, and JP Morgan. So let's look at the finance and go through this um, slowly. So the finance is the growth dropped in 2024 by 11%. But the main thing is, how much net profit are they going at? Well, their net profit is at 8.94%, and they kind of stay around 4, and it looks like they're getting more net profit. So that's pretty good. I kind of like seeing net profit around 10%, 30%, just because they expecting for a dividend growth too, and their gross profit, it stays around 33%. So I can look at these numbers and go farther in debt, but margin wise, they're not doing bad. They are making money. They're not in the negative. So right now, yes, I should invest into Lowe's based off that, but I don't see it at worth it at 8% to invest in, if for profit margin. I personally like seeing at 10% at the bare minimum, but hey, that's just how it works for me. So dividend allocation is 12% um, year over year. Revenue has dropped 17% in February. So, watching it drop 17%, I don't like it very much. Return on equity has in the last 3 years is negative 338%, and return on equity for February 2024 is negative 50%. So their equity is going down. They're not doing bad. At least they're working themselves out of their negative. So their long-term debt has decreased by dramatically. So they are starting to pay themselves out. So that's good news. Their growth rate isn't too bad. Operation margin, let's see, it's 9%. Net margin is 5.1%. Looking at these values, and they're paying themselves getting out of debt, I can truthfully say this is a pretty good company to purchase. I personally gonna wait to purchase this because I think it's gonna drop a little bit more just because of the major layoff I'm seeing. But based off who's the top buyer right now, Vanguard, Fidelity are increasing their share prices in here. Goldman Sachs is increasing their prices. So you have really good companies. I want to make sure none of these exiting company shareholders are one of the major share companies, and I don't really recognize any of them besides Principal Finance Group, and that doesn't bother me. New shareholder, so it looks like a top seller. State Street, I'm not really worried about them. Citadel Advisor is leaving, but Citadel's in a really bad position, so I'm not really gonna listen to them. And J.P. Morgan sold. They're not a really big investment company. So by looking at these investors, I can comfortably say I'm gonna end up purchasing this stock. I'm gonna wait for it to drop a little bit more, just because I think I can get it for a cheaper price. And the analysts do say it's gonna be going up. By how much? Who knows? Let me see. They do have it on here, but lows right now in the market in the last few days, it's been dropping. I do want to invest about $1,000 into this company to begin with, just because I think I can get a return on it. I might not get as good as return as the S&P, but the 5 years better, and the 5-year analysis, and it does give me a dividend pay. Their finance isn't terrible. They're not the best in the finance, but not everything's gonna be perfect. This is a pretty good company, but their cash flow has been going down, and it's one of the reasons why I am kind of trying to hold off on buying them, so they can improve a little more. Right now, they are improving their situation. If they're sitting there improving their situation, that's gonna be good. So if I go to AI and low stock and see what they mention about it, it's just be interesting to see. Low stock prediction. Let's see, earning report, blah blah blah. So if AI right now is selling for 243, the PE ratio is really high. There's nothing you can do. Almost everyone's PE ratio is really high, but at least they're paying a dividend of 1.88. It's not a bad dividend payout. They do have a good trend. It looks like they're still increasing. Lows. Data, technical. So let's go back and they do normally give you a stock prediction on how much they think. So they expect it to be $255 in the next year. So that's in 12 months the stock price they predict it to be $255, which is a $12 gain, which that's a pretty good gain. In 12 months you gain $12 on your amount of money you put in plus the dividend. So yeah, that's not a bad situation to be in. Now, what are some of the announcement of them so we can make sure that if there are any issues with them, like work, they're firing people or anything else like that, so we can make sure that if you do invest them, you know that what's the news on them. And the latest news says Lowe's joined the list of companies pulling back on DEI initiative. So, so they are pulling back on DEI. So if you do or you are interested, you know that's gonna be an issue. Lowe's company LO best dividend stock for steady growth. I agree. I believe this company is good for steady growth. I'm gonna add it to my portfolio, but I'm not gonna add a lot. I just believe it's a good stock to have because it's a nice steady growth, a good 9-10% a year, and it's not really worried about it. And Robinhood Starbucks claim another victory. Lowe's reverse DEI policy, which they're saying is bullish. Now, a lot of other people don't like it. The LBGQ, whatever, plus, I can't figure it out. They have too many syllables they kept adding on. It's not me trying to be offensive. It's they really keep adding on, and it's confusing to me. And with LL Flooring going out of business, I believe Home Depot and Lowe's is going to start getting business from the carryover. So I'm going to invest my money in it. I'm probably going to put $1,000 into investing in this company. I believe it's a nice, steady company, and I will add it to my portfolio. Thanks um, for watching. Like and subscribe. And I can't purchase the stock right now. It's Saturday. Later.